Fin the Week is brought to you by Indulge, a digital agency built on thinking for the global financial services industry.
Hi, I'm Amelia.
I'm Paul.
I'm Pat. I'm Russ.
And this is Fin the Week. Welcome back. We're here in Q3 and a full house.
Yeah, it's been a little while, hasn't it, since we've all been together?
Holidays
And
and kids.
Yeah.
big time for Russ. Congratulations on the new edition.
Thanks. Yeah. Father of two now. So yeah, I think that's it now. We'll have to see.
You think you're done? Well, we were just saying, weren't we? You didn't time it great, right in the middle of a heat wave with a newborn. Isn't the best, is it?
Yeah, it's been a lot of work keeping him cool and my wife, but hopefully it would get a bit cooler soon.
Fingers crossed. Fingers crossed.
It's a bit of a stinker at the moment, isn't it? It's kind of proper heat wave.
Yeah.
It is. And we were saying as well, you can't not talk about it. It's very hard not to start an email. Every single email you send, like, don't say it. But,
Yeah.
hope you're keeping cool. Yeah, we hope you are managing to keep cool. And Q3 officially on. And this is very exciting. We're launching a new edition called the Trust Reset. So busy quarter for financial services. Consumer Duty turns 3. The EU AI Act has more rules kicking in. And the SDR, the anti-greenwashing regime, is hitting its 2-year point. So we've called the edition Trust Reset because the through line is how trust in FS now gets earned, evidenced and audited, not just claimed.
Yeah. And I think when we were planning the sort of next few months worth of content, the thing that stood out was obviously that July specifically is the anniversary month. So it'll be 3 years to the day at the end of the month since the FCA brought out Consumer Duty. And so that's a big anniversary. And I think and what we've sort of planned to do over the next few weeks in particular is focus on Consumer Duty. And I think rather than just discuss it and what it is, because a lot of people will be doing that at this time, we're actually going to sort of dig into to sort of what has actually changed. So something we're going to be talking about today is a sort of teardown process that we've been doing, where we've picked some real case studies and we've looked into, well, how are firms tackling Consumer Duty? Are there still issues present, or are things looking good at the moment? So yeah, we've got a 4-part teardown series over the next 4 weeks. For each one, there'll be 3 firms we're looking at, and they'll be split into subsectors. So you've got retail banking, investments, mortgages, and protection insurance. And when we reach the end of that series, we'll be sort of the final episode will be coming out on the anniversary of Consumer Duty. So it'll be a good opportunity to just look at how everything has been going.
It's going to be really interesting. Before we dig in, can someone give a quick recap? What is Consumer Duty and why does it matter, and how are we kind of looking in 2026?
Yeah, I think, Russ, you're probably the closest to it. You've been doing a lot of work in this area, so putting you on the spot. Do you want to take that one?
Yeah. Well, say it's been around for a few years, and it sounds like now they're really kind of clamping down on the evidence side of Consumer Duty. Essentially, it's looking at FCA regulated firms and ensuring that they deliver the best outcomes for consumers. There's a set of guidelines called PRIN 2A, which outlines a number of different rules to conform to. There's 4 specific outcomes that firms need to look at conforming to, and yeah, it's essentially to make sure that firms offer fair and transparent pricing, that there isn't any kind of hidden terms, that consumers can compare products and understand the differences between them. Ultimately, to make a educated decision themselves on which product to choose. There's also the focus on vulnerable customers as well, to make sure that people perhaps who don't have smartphones or who don't have internet access can also receive communications, for example, that those communications are explained in plain English so people can understand them, especially in finance where you have a lot of acronyms, for example, and they know what they're signing up for. Also that they're signposting to things like help if you're in debt. If you're looking to get an overdraft, for example, the fees can be quite high if you're looking to take out a loan. Our companies providing advice on financial advice on how to improve your finances in addition to that, and they're not just capitalizing on people taking out these loans and actually getting locked in and paying high interest over the years. They have an obligation to be providing advice on managing your finances better and improving the situation for those consumers. So the consumer duty in terms of an FSC regulated firm, the reason it exists is because they have a duty to the consumers to provide a fair service, really, and the best consumer outcomes. So perhaps we can I think over the next few weeks we can discuss those 4 outcomes. One of them is price and value, and consumer understanding, and consumer support is all. And also like fair value in terms of cost as well. All of this I think we'll discuss over the next few weeks.
There's these 3 cross-cutting rules: act in good faith, avoid foreseeable harm, and enable customers to pursue their financial objectives. I'm keen to know, when this first came in, what was the feeling amongst the industry? Was this seen as a good thing?
I think it's hard to sort of speak for everyone, but I think from our perspective, it was seen as a good thing because it's looking to do good. It's not sort of adding rules for rules' sake. It's sort of it's just asking companies to do the right thing. And I suppose the big change and the thing that might make companies groan a little is the fact that you need to surface more evidence. And so, where companies might have once sort of been left to just look after their customers themselves, now they've got to still do that, but also surface all of the evidence and report it back to the FCA. And it's another piece of red tape, I suppose people might see it as. But no, I think generally, no one can really argue with what it's trying to achieve. It's trying to make the world of financial services and financial products a friendlier place for everybody, and you can't argue against that at all, I don't think.
Well, I was actually looking back at the because there was a diagram that the FCA released a couple of years ago when they first introduced the regulation. Actually, the kind of guiding principle of consumer duty is a firm must act to deliver good outcomes for retail customers. I think it's probably worth highlighting as well that this is focused on retail customers, on consumers, hence the consumer duty terminology around it. And as you mentioned there, Amelia, those kind of cross-cutting rules sit underneath that guiding principle, but then ultimately those 4 outcomes are what needs to be delivered. So I missed one out when I mentioned it just then. So the 4 outcomes of products and services: price and value, consumer understanding, and consumer support. So each 4 of those are kind of judged alongside whatever you're kind of selling, really. Are your products and services easy to do? Are they kind of fairly promoted and sold? Is the actual price and value of those also, like, in the market, in the market conditions compared to your competitors, and what you should be selling that at, is that fair? Can the consumer understand what that is? And then are they getting the correct support? And we'll probably get into this, but it's amazing how much of that information is hidden or basically kind of buried away. Or one of the terms you'll see quite a lot is sludge. So do firms find it difficult to kind of access that real information that will move from one step to the other, especially if there's accessibility needs which need to be taken into account. All of these products and services and all of this help needs to be accessed the same, no matter what kind of access needs that you have, whether you're using a screen reader, whether you have any kind of motor disabilities in terms of how you access or interface with these digital channels as well as not. So all of this needs to be taken into account. I think from the research you've done, Paul, definitely moving into third year, it's going to be really interesting to kind of hear the plans over the next couple of months. But they're going to be clamping more down on, have companies flag changes in their board reports, which is actually, as I talk about with UXDuty, you can kind of scan a website and find multiple issues. Are those issues now being fixed for the consumer? Is there now evidence that websites are accessible, that there isn't hidden terms, that value is kind of fair for the consumers? So it's going to be really interesting now, and it'd be interesting to see how FCA react and what kind of pressure they're going to put on firms to basically fix anything that's wrong.
And is that kind of where we are in 2026. So we are 3 years down. That is, 2026, the year of inflection.
Yeah, I've spent some time reading the FCA's sort of summary of board reports covering the first 2 years of Consumer Duty, and they've sort of broken. The tone of the document is very much sort of, we understand everyone's still figuring this out, it's all new, but it has the feeling that year 3 is when it gets real. They've sort of said year 1 you were figuring it out and we've highlighted some flaws. Year 2 you started to address those flaws. Now it feels like there's no excuse. They don't explicitly say that, but that's the vibe it gives. And they sort of broke down in their kind of year 2 review of board reports, they broke down the kind of positives that they recognized, the FCA. So they said that there was more board oversight. So it was clear that firms and their boards of directors were sort of taking this seriously. They were engaging with the kind of documentation, and they were at least signing it off. There were better action plans. There were sort of boards were recognizing flaws and were coming up with action plans, and there was better evidence of sort of quantitative and qualitative sort of data sources being used to sort of compare what was going on, and specifically looking at year 2 versus year 1. But they also listed out some areas for improvement. So they sort of highlighted that there was too much data that just wasn't tied to outcomes. So firms were great at sourcing data, but they weren't necessarily very good at tying it back to actually what it meant, and I think that's something we can probably all relate to. You're kind of in a world today where you can get access to all sorts of user data, but sometimes it doesn't really matter if you don't give it a reason. There's something else that stood out, and this ties back to something you were talking about before, Russ, about how the scope is on consumers, so end users. But something that the FCA highlighted was that firms were quite weak in terms of monitoring the distribution chains, and I think this is going to be a big theme for the year ahead. So, and I've experienced this in conversations I've had with people in finance firms, where they almost disregard the conversation about Consumer Duty, because in their mind, we don't sell to consumers, therefore we're not in scope. But in actual fact, a lot more firms are in scope than they might necessarily realize, because if you're part of a distribution chain that eventually reaches a consumer, then what you're doing is in scope. So if you're a technology provider for a fintech that eventually leads its way into a fintech's banking service that a consumer uses, then you're very much in scope. And that might be a technicality, but things like how easy your systems are to use, how good the it is surfacing consumer data and how easily consumers can request their data be removed from your system, stuff like that. That's all very much in scope. And I think people are going to need to recognize that if you're part of a distribution chain, then you're in scope. And then there was also a lack of evidence of boards challenging findings. They were just sort of, the FCA sort of alluded to something where maybe board members were reviewing their kind of reports and then just approving them, but they weren't necessarily challenging findings. So there was kind of the push for people to actually engage with this stuff and challenge findings. And then finally, there was too much focus on products and sort of services and things like that, not enough on consumer understanding and sort of consumer support. And I can understand why that would be, because proving consumer understanding and good support outcomes is arguably harder than assessing that your products are correctly positioned, stuff like that. So I can see why firms potentially struggle with that. But I think year 3 will be the year when the FCA sort of says, okay, no more excuses. Now you've got to figure this out. So it's good timing. And that's why we're really looking at the teardown approach we're going to be doing, because that's really what we're focusing on, is the consumer understanding and the support elements. So I think they're the big themes that stand out.
I think accessibility is like a really, really important thing. Or you sort of alluded to it there, Russ, with talking about support for screen readers and support for people who aren't able to perhaps use their hands either temporarily or on a permanent basis. And I think as a whole, the banking industry or the finance industry in general has a really, really long way to go in accessibility. It's one thing making your website accessible so that people can understand your products and read about your interest rates and your terms in an understandable, easy to access manner. But then you've also got to think about what happens when that user logs into your online banking system, and your online banking system is provided by a vendor who built their platform in 1998 and have just been sort of extending it gradually using blue tack and sticking plaster over the last 25 years. And it's an absolute horror show. And most banking platforms are like that. Like one example, I'm not going to say the name of the bank, but one of the firms that I bank with, I went on there a little while ago and I was looking at my credit card statements, and I only went back like 2 years online, and I needed to look back earlier than that for various reasons. So I messaged their customer support and they said to me, "Oh, okay, we don't have those old statements online. You need to raise a separate support ticket and we'll post you the bank statement." And I just thought, that's absolutely ludicrous in this day and age. Why can't you just surface the credit card statement to me? And arguably post is an accessible form, but it was just clunky and annoying and not accessible. And those are the kind of challenges that these banks should solve. And it's probably not the bank's fault. It's probably, like you mentioned, Paul, it's probably the fault of the upstream supplier of their banking system. It's just got serious limitations in one way, shape or form that prevents them from solving that problem. There are clients that we've worked with who have asked us to style their banking systems, and then as a developer you log in and it's just an absolute disaster. You're working with HTML that was obviously written like before CSS layouts were a thing in like 2001 and like it's definitely not accessible, and to change that and make it formally accessible would be an absolutely huge task, especially if you're a banking provider that provides kind of online banking services to 100, 200 banks across Europe. You're talking like millions and millions of pounds worth of investment to overhaul that, bring it up to date and make it modern, combined with the risk of pulling that whole system out and putting in a new system for every single one of your clients. A massive undertaking. So it'd be interesting to see, I guess banking as an industry is kind of quite behind. You compare that the standard high street banks to the challenger banks like Revolut, who are absolutely on it and smashing it out of the park. Those high street banks are going to struggle to kind of bring their platforms more up to date. It'll be interesting to see how hard the FCA come down on this sort of thing and whether they force them to move forward or not.
I think a lot of firms as well are going to be adopting AI as a solution to fix all of this, and I'm not 100% convinced that AI will just be able to take an app or website make it accessible. Because there's a couple of reasons. I was just looking at, so WebAIM do a report every year looking at the top 1 million home pages in the world, kind of based on the criteria that they use. In the last year, the number of page elements has increased by 22.5% on average on a home page. And I think a big part of that is AI. And I think even if these firms manage to fix the underlying accessibility needs in terms of a checkbox, it has semantic HTML, it has the proper headers, has the proper form labels, so it should be used by a screen reader. I think what these firms are probably going to miss is that qualitative feedback on, is there, are their digital channels cognitively accessible? Are they just now overwhelming users with information and elements and pages to make them even more difficult to understand? And from a checkbox perspective, it might be like, yes, this is accessible, but if they've increased elements on the page by 20%, or if they've written all their copy by AI and it's difficult to understand and even more confusing now, then they still might not be conforming to the regulation. And actually, by making what they perceive as their website accessible, they've actually made it worse and more confusing. So I think we're going to see a lot of systems like overhauled quickly using AI and perhaps becoming even more confusing and more difficult to use. So that's worth keeping an eye on. And the WebAIM report suggests that actually websites are getting even more complicated.
Then on the flip side, if you use AI well, you can quite easily turn a really verbose, kind of legally styled contract into a form that can be read and understood by someone with a reading age of 12 using a large language model. So there's huge opportunity for firms to take a lot of their really complicated documentation and actually convert it into a form that is much more accessible.
What they need is an agency to show them how to do that.
Do you know one?
£1,000 a month.
Yeah. And I think Consumer Duty is really interesting generally as well, even for firms that aren't within scope, or even for non-finance firms, because it reminds me a lot of accessibility guidelines, because you've got the Web Content Accessibility Guidelines, WCAG, which, so for instance, all public sector sites need to achieve AA standard with WCAG in the UK. And that's just, that's all the stuff we've just been talking about, accessibility. So making sure screen readers can use a site, making sure people who are, say, colorblind there's enough color contrast to make sure they can still read things. But the thing that's always struck me about good accessibility is that it's just good practice anyway. Like a site that is accessible to AA standard is better for everyone. It's not just better for people with challenges, it's better for anyone, because it's just a better system. It's better built, it's easier to use. And I think the same applies to Consumer Duty, because Consumer Duty goes a few levels deeper, because it's looking at, is what you're doing easy to understand? Do you know what you're buying? The sludge practices is interesting, because the way when the penny dropped for me about sludge practices when I read an example of, it's a bit like when you sign up for a subscription and you can sign up online for the subscription, but then to cancel the subscription you need to phone up and go through a call center to cancel it. That's sludge practice, because it's basically, yes, it's possible to cancel it. It's something you can do, but it just adds a hurdle that will stop a lot of people. And it's to say, your example of the bank, Pat, that wouldn't easily surface beyond 2 years worth of bank statements. It's not a huge issue because you can get hold of them, but it is still kind of a piece of sludge, because it's a hurdle that doesn't necessarily need to be there. And so I think, Consumer Duty, even if you're not in scope or if you don't think it's that important, I think there's so much to learn from it, because if you tick the right boxes, you're going to be making something that's better for everyone.
Yeah, 100%. I mean, we'll probably get onto UXDuty and what it exists, but there was one example that springs to mind where the platform just quite quickly found that at the beginning of a savings account process, the link to the terms and conditions text was light grey against, I think it was like a beige background. And it was like, you don't need, a WCAG ratio, check to see. I struggled to see it. And last time I had my eyes checked, I had 20/20 vision, and I struggled to see it. So are they doing that? Are they doing that on purpose? Surely not. It's just, but would they? I don't know. It raises that question. I think if there's anything to, suggest that they're kind of making like the terms difficult to find, that is a real serious issue, and it isn't a big fix. Just increase the kind of increase the contrast of where your terms and conditions are and the link to your terms and conditions. It's pretty simple, and every the designers or the caliber of designers that would be part of these teams working for these big firms, should know this stuff. It's like design UX 101 kind of basics. Get your color contrast right, but especially on links to important terms and eligibility information.
Well, that actually seems like a good chance to talk about UXDuty. What is it? Why don't you explain how it kind of works?
Yeah, so UXDuty, it really started off as a UX research app. It initially was looking at the kind of UX heuristics of platforms. So it was looking more at kind of whether a website used minimal design, whether it had good error, whether it had good kind of error flagging, things like the readability of the language on the page. It also looked at accessibility as well, to make sure it was usable for like everyone, no matter their ability or situation. I think over time, it's really doubled down on the fact it's a great tool for checking whether firms, whether it could flag anything that firms could use as evidence, or at least as a basis for evidence and reports to improve in line with consumer duty. And I've actually just recently overhauled the scanning engine as well. So it would go to a web page, it would scan the page in line with the PRIN 2A rules. We're also building up a database of checks looking at the underlying markup as well. So it is using AI. It uses Claude for that kind of initial scanning, but to get around the fact that UXDuty and Claude often hallucinates a bit, it would often go away and find things which weren't right. It would kind of be coming back and claiming that things that offers weren't kind of fairly positioned, where actually you then visit the page and it was FCA, SC logos weren't there, or actually they were. So actually evolving it to kind of cut out so much hallucination, so it looks at the underlying code. And then the other thing it does is check against the Web Content Accessibility Guidelines. So these three, there's kind of the qualitative scan, there's the factual scan, and then there's the WCAG scan. And then what it does is it compiles all this information into set findings. So it acts as, it's only checking your digital scan, or your digital channel. So it forms part of a board report. For example, as you mentioned, Pat, your actual experience with these banks or firms, and maybe via email and maybe via calls, you may have to kind of pop in and speak to them if you're, applying for a mortgage or something like that. You'd often have an in-person meeting, and it's an important firms have those processes right as well, in line with consumer duty. So UXDuty, it scans your digital channels and finds things that should be fixed, really, or that might be in breach of the consumer duty rules, using those checks, and then that evidence can be put into a board report. You can assign people to fix the things it's found, and then you can fix those. Then you can actually rerun the scan again to kind of show that things have been fixed. As an example, I think there was a firm which, alongside some kind of basic checks for, explanation of acronyms using plain language, which it kind of picks up on, it would also pick up on things like, for example, we're looking at bank switching. So one of the firms was offering like a £200 offer for like switching banks, but actually you had to deposit a certain amount of money to kind of get the offer. So you have this big headline on the page. It's like £200. I think there was another one that was £600, but in tiny, tiny small print, which is, grey against a white background, kind of says you need to deposit £4,000. And it's, in terms of PRIN 2A, and there's kind of specific rules to kind of increase the emphasis and make it clear of the terms to receive that offer. It wasn't meeting the kind of obligations that they needed to. So kind of saying that you need to deposit £4,000 to get £600 for bank switching needs to be more prominent. It needs to kind of be easy to find. You can't have a massive 200 pixel, font size, receive £600. You click on it because you're excited about, switching, and the whole offer is so persuasive that you think you're going to get this money, but you might not have, £4,000 to come to put in to get the offer, so you never get it. And it's examples like that which it's finding using its kind of scanning engine. And I tested it on 3 firms. One of the exciting things about UXDuty is its integration with analytics. And we've only managed to test that with Indulge at the moment because we have the API access into Google Analytics and Microsoft Clarity. But the idea of it is, and this is kind of going back to my UX experience, is that when you attach UXDuty in terms of an API, it will find journeys that have friction using this kind of friction journey kind of a creator, really. One of the best practices with UX when you're looking at analytics is to look for outliers in terms of data. So if you see a page that has, say, really low engagement, but it's a high value page, and that's potentially an outlier. What's kind of happening with that page. If you see a page with really, really high exit rate, for example, but it's an important page in the funnel, then that's kind of an outlier, and you need to kind of be looking at that. So what we've introduced with UXDuty is API integration. So you can pull in your analytics, you can set some UX signals, and it will highlight some journeys which have potential friction or sludge, because based on these kind of analytical signals, you can then scan those pages in the journey, and it would scan using those kind of 3 methods that I outlined there, and it would give you a consumer duty risk score, which would be high, medium, low, but then it would give you a set of findings. Now, I've only tested UXDuty using these 3 firms and setting up manual pages to track because we don't have access to their API. It'd be really interesting to see if we could work with one of these big firms and access their Google Analytics, exactly what it's capable of. Because the journeys that I've put in and used with it are kind of quite manual. I think one of the bank switching journeys has 8 pages, so I manually had to put in each URL. Then I run a scan and it's come back with like 80 issues. It's finding a lot of accessibility issues. I think 40%. I think it found 200 issues, it kind of flagged 200 kind of findings across 3 firms, probably looking at 5 or 6 pages per firm in the bank switching journey. So it's flagging a lot of findings. A lot of them are accessibility. As we discussed, I think going back to WebAIM, I think 96% of all pages, all home pages in their review have accessibility issues. And we're not just talking about 1 or 2. I think the average is it's kind of 40 or 50 or something. It's pretty high. Yeah, looking at underlying code, you can normally find some accessibility challenges, but those 60% are really quite interesting because they're kind of looking at the actual FCA, the consumer duty rules, and like I said, analyzing the underlying code to find where things are missing, and also giving a more kind of qualitative opinion on perhaps what's missing. And it isn't it's not going to be it's not going to be fact all the time. I think it's to give these firms an idea of what needs to be improved. They then take that, they can speak to their customers, they then can be the human in the loop validating these findings. But when you're talking about large data sets, so if we let it loose on a journey on like a big bank's website, for example, based on analytics, and it looked at 20 pages, then they can then filter by what UXDuty thinks is the kind of high risk. They can look at those kind of one by one, and it takes away that whole kind of initial human analysis of like finding where these challenges might be. So it will evolve over time, and it'd be good to talk about more specific examples, I think, over the next few weeks as we, as we focus in on different teardowns. Yeah,
that seems like a good place to sort of, Paul, maybe talk us through what are we going to be doing over the next few weeks? How is it going to work?
Yeah, so as Russ mentioned, we've got this tool UXDuty, and we don't. This isn't like a pitching session for that. It's more that we've built this internal tool which we've realised is really useful for analysing the consumer duty outcomes, particularly things like consumer understanding. So what we've done is with the anniversary coming up, we've basically over the next 4 weeks got 4 teardown sessions lined up. And so Russ has been looking at the first one that we'll be talking about next week is bank switching. So taking 3 different types of bank and looking at the journeys on their digital platforms that you have to go through to initiate a bank switching process. And the thing that I think is really interesting about this methodology and using a tool like UXDuty is that it looks at the journey very plainly. It doesn't have context, and that's useful because that's where a lot of consumers will be coming from. They'll be starting the journey without much knowledge necessarily. They'll just know I want to switch bank for one reason or another, or they're enticed by an offer like the offer that Russ was just talking about, and so running a tool through it without any sort of prior judgment, the tool can just pick out the facts and it can say, okay, well, this landing page has this issue that yes, there's an offer there, but the terms and conditions, which are meaningful, aren't presented prominently enough. And then a human, we can look at that, we can discuss, is that fair or is that not fair? But importantly, it highlights the areas that firms themselves and the boards behind these firms should be aware of, and they can judge it. They can say, well, we need to entice people onto our page with a clear offer, and then we'll present the terms and conditions. And they can argue that whether that's the right way to do it or not. But the tool that we're using and the method we're using is trying to surface these discussion points, and it's proving quite useful at doing that. So yeah, like I say, we're going to go over the next 4 weeks. We're going to start by looking at bank switching. The second one, let me just double check my notes to get the right order. I can't find it now. Oh yeah, so then we're looking at investment products. So sort of as they call robo investing, so the sort of services that consumers can sign up for investing money. Then looking at mortgages, and then finally protection insurance. So things like life insurance policies, stuff like that. And we're taking in each week, we're looking at 3 case studies. We're running their journeys through a process. We're surfacing the things that stand out, and we're going to be sort of discussing, are there any common trends? Are there areas for debate where you could say, what's the right way to tackle this? And I think it will just be an interesting way to discuss consumer duty and how things are sort of going right now, particularly, like I say, that consumer understanding point, because fundamentally it's easy to sort of say, oh, the website is just the first step. We go through a website, a user has to initiate a process through there. But that's where a lot of consumers will form a lot of their opinions and how they then have a relationship with a brand from that point. And so it's where you really have to sort of set out your stall and be clear on what you're offering. So that's what we'll be looking at.
I think it's going to be some really interesting discussions that we're going to be having over the next few weeks. We've touched upon it. We'll talk a little bit more about week 1 shortly. But first, should we play some Jargon Busters?
Yeah. Let's give it a go.
we haven't all been here for a while. So we've had some mixed successes in this. So if you've not caught this before, every week I put the guys to the test. I give them an industry term to see if they can work out or explain what it means. This week's word is escrow.
Oh, this is good timing. Pat, you're working on an escrow project right now.
Oh, amazing. Well, let's see how well you can explain it then.
Very familiar with escrow.
maybe Pat should go first, or was that unfair?
First and last,
Yeah, so escrow is the process of holding funds within a third party, in kind of a neutral third party as part of a transaction, so that one party effectively can't withhold the funds or mess around with those funds, creating a conflict of interest. So I'm avoiding a conflict of interest in transfer of funds, I guess. It's my fairly clunky definition, but I think I'm along the right lines.
Very good. Has anyone got anything to add to that?
Yeah, I mean, I had heard of it before this project as well, but I had heard of it in the context of domains. So often you'd kind of, that your kind of payment for domains would kind of sit somewhere else between the kind of buyer and the seller, which is essentially kind of escrow. But obviously we were looking at in a different context recently for a project.
Yeah, so it could be if you're buying a house or something and you need to pay a deposit, then you might pay the deposit into the third party. And then whilst it's in the third party, you can complete the formalities in the contracts. And then once it's all signed, the third party can then award the deposit to the vendor. And it avoids this risk where you pay the deposit to the vendor before you sign the contract, which means the vendor could just run off with the money. Or on the flip side, you sign the contract without paying the deposit, and then the vendor is subject to risk. So it's kind of de-risks that transaction. Another one is deposits on rental properties, where rather than a landlord holding the deposit and then withholding it at the end of the term, due to claimed damage that isn't there, if the deposit can sit within an escrow platform or if somebody's acting as escrow, then it's that third party's call as to how much of the deposit is withheld based on actually how much damage there is in the property or not. So yeah, that's kind of what it's useful for.
Anything to add, Paul?
No, I can't. I don't think there's anything I can add. I think most people in the wild will have probably come across the process as part of renting or purchasing a property, but won't necessarily have the name for it. But yeah,
I was going to say, if you watch any of those like American real estate programs, you'll be like very familiar with it. But yeah, the official meaning we've got here: a neutral third party holding assets during a transaction until conditions are met. So yeah, well explained there from
Full
well
points.
done. 1 point all round. And of course, we'll have more of that next week. And we will be kicking off the teardowns properly. So I know we touched upon it, but let's just confirm, what are we starting with next week?
Russ, do you want to take it?
I think we're going to, in terms of, instead of just looking at one firm, I think we're going to look at like a large provider, kind of a mid-tier provider, and then a more kind of challenger kind of provider as well, just to give a kind of balanced kind of view. I think we're going to be referring to them as firms, probably firm A, firm B, firm C, instead of calling people out. But yeah, hopefully there'll be some kind of common themes and some interesting points to debate.
We're looking forward to getting into it. So that is our first teardown episode. Next week, we will see you then. Thanks for listening and have a great weekend.
Cheers, guys.
Cheers. Bye.
Before we go, it's time for a quick shameless plug. This episode was brought to you by Indulge, a digital agency built on thinking for the global financial services sector. If you're looking for an agency that can specialize in UX and design, production, and marketing, then look no further. To find out more, visit indulge.digital. Thanks for listening.